I'm here to deliver a very important message. I've been trying to record this video for the past, 2-3 days, but I've been sick and I've only had so much energy to record. I did what I could, but I have to make this video despite how I feel right now, because I'm seeing the state of the world right now, and these are very uncertain times if you're holding money in the markets, and a lot of people are going to get wiped out. At least that's what I believe. I'm going to tell you why I believe that. Yes, you could buy the dips as they happen. All those times when the market keeps dropping, you could buy it back up, but I don't think the market is done correcting. It has a lot of correction to do, because for the past few years, inflation has been pushing a lot of these assets up in price, and a lot of these company shares, some of these cryptos, some of these natural resources, assets, a lot of things are overpriced. And this week, DeepSeek, an AI model that China created, had shocked the markets because of how powerful it was, despite how it was created with only a fraction of the cost that a lot of American AI companies use in order to create these models. So it showed that the tech market, a lot of this this AI bubble that's been happening, and the inflation of tech related stocks and innovation stocks, it showed that a lot of it is fluff. And it's not to say that it's 100% fluff, but it was enough for a stock like Nvidia to fall down several percentage points. The S&P 500, the NASDAQ, a lot of assets were falling significant amounts. And I think that DeepSeek was only a trigger, but the market is in a fragile position right now, where it doesn't take too many factors to knock it over and cause extreme volatility. I still think that investing in small increments over time could be a viable option, but holding most of your wealth in investments right now is risky. So aside from the factors that I had already mentioned, there's a lot of things happening around the world right now. So investors are very uncertain, and you'll see that when you look at the markets. The price of gold has just been going up. People trying to put their money in safe haven assets. At the same time, how much can it go up? Gold is one of those things where, as the world seems to be entering times where you don't know what's going to happen, it's a pretty solid investment. If you were buying gold from decades ago, you're in a good position right now. But everything has to have a correction at some point. There's a lot of things happening around the world right now. One of those things being tariffs. So with Trump getting in office, he's just been creating a lot of movement in the markets through the things that he's declaring and has been actively doing. So holding in these conditions is so risky, because he's placing tariffs on Mexico, Canada, China. He's threatening tariffs on Russia. Threatening tariffs on, was it Denmark? I think it was Denmark. And in the process of doing this, is making trade relations between the U.S. and other countries start to shift, and a lot of geopolitical relationships are beginning to transform and evolve as a result. And the markets are still reacting to this, because this is an ongoing situation. I was doing some research last night going into this morning. Technically it was this morning because it was like 4 a.m. until like 7 a.m. And I'm reading up on the way that he's approaching all these different countries. And I'm looking at the correlations between like the exports and imports, and I'm looking at the price charts. You can try to figure out which way things are gonna go, but what it looks like to me is with the imposing of all these tariffs, like literally today, Trump had imposed the tariff on Mexico and Canada. So that's another reason why I gotta get this video out. Just make sure you stay informed and it doesn't come as a shock when the market gets shocked, because these things take ripple effects. Like, I imagine it to be like dropping a whale inside of a lake or a giant boulder in a lake. It's gonna have its initial splash and then it's gonna ripple outward. And the ripples are beginning, but I don't know how vast they'll be. I don't know if they'll turn into waves and tsunamis. I just saw a headline this morning saying that Trump declared a trade war with the world. World War III is a war of trade? I don't know. At least it's not bloodshed, but at the same time, a lot of relationships are being redefined and assets are going to be revalued, and supply chain networks are also in an unpredictable position because of all this. Because in some cases, there's trade wars firing off because they don't like the fact that tariffs are being placed on them. That's the whole reason why, well, that's one of the reasons why China released the DeepSeek AI model on Inauguration Day. Because the US tried to prevent China from getting microchips from the video. And they were also putting tariffs and or restrictions on where China can get its chips. Well, on giving chips to the US. No, on giving chips to China. Fact check me on that. But it's coming from a real place. I read this article a long time back, a few months ago. And I was reading up on something along the lines earlier this morning. But this has just been an ongoing dispute, just trying to stay ahead of China in regard to its technological advancements. So I'm just speaking on all this objectively. The truth is, none of this stuff, none of these people who are at the top are really concerned with us. We're kind of just getting hit with the after effects of all their actions. Trump is trying to make well, he's not trying. He created in I think it's called Stargate. He's trying to put the US ahead when it comes to AI. So there's a lot of initiatives that are being pushed forth by the US that's going to create a lot of massive ripples. And it's only been like 3 weeks of this new term. So it's honestly safest to just take a step back and wait for the market to dip and buy back in later on if you choose to, because all these financial assets are prone to a steep decline through overvaluation and all the factors I mentioned. And investors' emotions are what makes the market move. So with some assets more than others, because it's all speculation based on how humans value certain materials or resources. So this emotional uncertainty is going to reflect in the prices, and it kind of has like a domino effect, where if some people see an asset's price falling, or they hear a certain piece of economic news or information, they're like, oh nah, like let me sell off. All those people trying to sell at the same time makes the price go down, some people get scared. They're like, nah, let me just take profits now because this is the crazy drop. The market drops even more because everybody's selling. Some people catch on later and they're like, oh crap, let me just close my position. I can't hold. And now like all this money is being made off sellers. But the sellers are losing money because they were buying in before. And then it really has its biggest effects when it's people in very high positions, like with a lot of capital, who are selling off at high amounts. So we gotta be careful because we're playing with giants here. So another thing, January is usually a stagnant month, and the market is going to create more opportunities as the year progresses and as economic policies and reports ensue. So as this is taking place, the price volatility could be both a blessing or a curse. The market can go up or burst. Think about crypto from November 1st until now. It literally, like, so many of them had boomed exponentially. And I mean, you could have multiplied your money. Definitely could have. Investing is really about positioning yourself. You got to position yourself at the most optimal times. There's no way to predict the markets. But one thing is for certain, if you look back through all the price action data of any asset, if it goes up, like an exponential curve, a very steep ascension, there comes a point where it comes back down before it can continue. And within all this, it's possible I could be wrong. The markets could just go up from here. A lot of markets could. But nah, I believe what I believe, because it's coming from a real place of just seeing that with all the information available, with all the advancements taking place and the changes happening in the world, and the policies being issued by central banks across the world in response to these different changes, and investor sentiment, it doesn't make sense to have a lot of wealth in the markets right now unless you're being very strategic. But because you can invest in long-term things like food and grains, like livestock, shares on that, or because like gold, silver, Bitcoin, the top US stocks, the S&P 500, NASDAQ, there's different types of ETFs that you can invest in, because there's even like ways to invest in farmland without directly owning it, ways to invest in housing, real estate without directly owning it. So certain markets will be better in this time than others. So if you want to participate, you got to be very deliberate, because it's like walking on eggshells right now. I mean, interest rates are still rising, you know? And in these market conditions, your money is best, well, from what I've found through research, it's best to have your money in things like treasuries or CDs, essentially money market assets, where you can put your money in a place where it'll grow at a stable interest rate in order to not be outpaced by inflation. That's the type of things that you could look into right now, because it never hurts to stack up your money, grow it at a steady pace. Like with certain CDs, you could grow your investment by 5% every few months or years. So we'll start to see this reflect more in investor sentiment. Money is going to be moving into places that are more safer investments, and just got to keep your eyes open, because I don't know how long this is going to be the case. I just know as of today, February 1st, if I don't put out this video, I'm going to feel guilty, because I know a lot of people will get cooked. And I just prefer us all to be in a place where we can make informed decisions, because that's what investing and trading is about. If you're not able to make an informed decision, you're gambling. And the thing is, it's gambling regardless, but like, you really just want to throw a dice, or you want to have a method to the madness, So yeah. So to answer the question in the title of the video, should I invest right now? I don't think so. This isn't financial advice, so you do what you want. This is just my perspective, and it's based in my own research. Do what you will with that information.